If you enjoy following business and economic news, you may have observed that all the experts, economists, analysts, and well-known figures in the financial sector are predicting an impending financial catastrophe and severe recession. The United States is speeding toward a perfect storm of economic hardship, claims Ray Dalio. A persistent downturn in demand is also forcing Elon Musk to lay off thousands of workers at his firms. The stock market super bubble, according to Jeremy Grantham, hasn't burst despite a 30% decline. However, Americans should prepare for an economic cyclone, according to Jamie Dimon. 70% of Americans believe that they will soon be experiencing a recession. Contrary to Michael Burry's media predictions, it appears like we're on the verge of a severe recession that will last for several years. But spreading fear is not the goal of this video. Instead, it's to figure out how to take advantage of the economic downturn and financial catastrophe in 2023, so we can prosper and become wealthy. Hey, welcome to Stock Market Mate. Today we'll talk about Michael Burry's advice on making millions in a possible market crash in 2023. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. A recession is defined as a significant, pervasive, and persistent decline in economic activity. Economists measure a recession's length from the prior expansion's peak to the downturn's trough. Recessions may last as little as a few months, but the economy may not recover to its former peak for years. For instance, decreasing consumer demand may force businesses to lay off employees, which may have an impact on consumer purchasing power and ultimately weaken consumer demand. The United States has had recessions regularly, so it is nothing new. The economy frequently reaches a turning point before gradually slowing down, but recessions are becoming less frequent and short-lived in recent years. Although the 6 recessions that have occurred since 1980 have averaged less than 10 months, the average US recession since 1857 has lasted 17 months. In October 2020, analysts with the investment advisory firm Raymond James argued that there was no recession in the US. According to the investment advisor, the economy did indeed fit the technical criteria for a recession. To stop a recession, the Fed can employ a number of monetary policy tools. It can use open market operations such as QE to lower interest rates or to boost demand and raise the amount of money in circulation, through which the Fed may buy additional kinds of assets. The Fed is crucial in maintaining economic stability. Prior to the Fed, recessions were frequent and expansion periods were shorter. However, as a result of Fed policy, the length of the current economic expansion has expanded, and individuals are currently experiencing less recession than in prior years. Consequently, let's discover ways to prepare for the impending recession. How might the unfolding catastrophe benefit you? And how can you make sure that you recover financially from the impending crisis? Although an economic crisis is a time of anxiety and turbulence, it is also the moment when having cash on hand is crucial. When a recession occurs and less money is flowing in, you are at risk of defaulting. Selling your riskier investments and starting to amass cash is cautious and wise. For instance, Elon Musk sold all of his Bitcoin holdings when the business environment for his company started to deteriorate. People should start saving money and minimize their risky investments in a similar manner. Even Warren Buffett has a sizable cash reserve of more than $100 billion, and he is patiently waiting for the ideal buying opportunity when asset values are decreasing. Price declines, however, can last a long time during severe recessions. When Bitcoin was trading close to $69,000, nobody anticipated that it would drop to $15,000. Everyone anticipated a price objective of $200,000 or possibly $1 million. Nonetheless, as the economy began to sputter and the Fed began to tighten monetary policy, all asset classes received a reality check. Advice 4. When the economy is down, it's best to be safe and batten down the hatches. Wide and persistent performance disparities between asset prices and values can develop during recessions. People prefer to save cash during recessions instead of making risky investments. Only when the economy is booming are risky investments profitable. Therefore, cutting back on hazardous investments and spending as much as you can while getting ready for the winter is the best preparation for the upcoming recession. This allows you a ton of flexibility to use cash once more when the time is perfect. Save, save, and save. If you want to be prepared for the next recession, then do just that. Many businesses file for bankruptcy during financial disasters. People won't labor for free. Keep in mind that they need to eat to maintain their health. Advice 3. Invest in liquid assets and businesses which can help you to face the recession. Liquid investments are those that can be rapidly sold and converted into cash. Any investment that can be quickly turned into cash without significantly affecting its value is said to be liquid. Cash money market funds and shares of publicly traded blue-chip businesses that trade on an established stock exchange are examples of liquid investments. You could go bankrupt in a matter of hours if one of your risky assets, such as cryptocurrency, coins, or FTX-type businesses, suffers catastrophic damage. Therefore, having a liquid investment during a recession is crucial, because banks and investors consider liquidity when considering whether to lend money or make an investment. In a business, it's necessary to avoid poor financial management. Always invest in liquid businesses. Advice number 2. Use the recession as an opportunity to make smart decisions or decisions that can make you a millionaire. Fortunes are made during economic crashes is a popular quote from Robert Kiyosaki. That was amid the financial crisis of 2008 and 2009, which helped him become a multi-billionaire. People with good judgment can profit from the crisis and make wise investments at the appropriate time. You can take advantage of these chances to increase your wealth, maintain profits, or even develop your company or net worth. There is typically a significant discrepancy between asset prices and their real value when other businesses are stagnating or contracting during a recession. When the economy is struggling, an asset may only be worth $10,000 to one person, but it may actually be worth $100,000 to someone qualified to hold it. Robert Kiyosaki actually followed through on this. During the 2008 to 2009 housing market meltdown, he made an investment of $500 million in real estate. As a result, providers of everything from homes and raw materials to technology may offer discounts or cut their pricing to maintain cash flow, since $500 is now equivalent to many billions of dollars during a recession. Enterprises will need to conserve cash to survive, as many small businesses are anticipated to suffer challenges with cash flow during a future recession. Increasing your sources of income as the economy falters is one of the wisest things you can do. Recessions are helpful for career advancement. Taking the lead under pressure can give you the edge over your coworkers and help you advance your career far more swiftly and effectively. Different issues are anticipated, even though recessions can impact firms in different ways based on their size and type. While a Fortune 500 corporation might be able to minimize costs by renegotiating terms with suppliers and eliminating roles, a small consulting firm might run into cash flow issues as a result of clients delaying payment of invoices. Advice number 1. Act prudently when the future is uncertain. Choosing how to manage your investments might be difficult, but generally speaking, doing nothing is the wisest course of action. There is a possibility that the market would decline once more if we experience a recession. The decision to remove your money from the market before a probable crash may appear wise in this situation. Stock markets typically experience declines of at least 30%. Even market specialists are unable to foretell how the stock market would behave since it is so unpredictable. If you don't take your money out right away, it's possible that the market will keep declining and you'll sustain further losses. Additionally, you can wind up paying less for the exact same investments you just sold if you choose to reinvest later. You might also be wondering how to pay off your debt while maintaining your financial stability. If you have debt that needs to be paid off, you might find it difficult to make ends meet in the present economic climate. Prior to a recession, it's critical to pay off debt, especially variable or high-interest debt. However, during a time of economic uncertainty, preserving money might be more crucial, especially if your safety net is not very strong. These are only a few tips for getting ready for the next crisis, but ultimately, you have to consider your particular situation, which is undoubtedly different from everyone else's. Let us know your thoughts in the comment section. If you found this video helpful, kindly click the like and subscribe button. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!